Salah holidays are over. We're back to work normally. I am Yusuf Akugu. Welcome to Business Daily. We now take our top business stories at this time. Glad to have you back. Interesting development there in the world of business. Now let's go to the stock market and of course to give you updates of how the market ended on Tuesday, the last trading day of the day before today. Of course, remember Wednesday and Thursday were declared public holiday for Salah celebration. Now we look at the data from the market. Now we look at the snapshot of how the market closed on Tuesday. Of course, it closed positive with the all-share index crossing 60,000 basis points. The last time we had this number was before 2008 global meltdown. The market closing positive there, 1.30%. Of course, in terms of market cap, of course, it's actually 32.7 trillion naira. Of course, the volume of trade, 763.696 million volume of trade. Of course, value at 12.533 billion naira. Of course, in terms of deals, 9,463 deals exchange hands among investors on the day. Of course, looking at the gainers for the day, of course, we have the likes of Ikeja Hotel, Cordvile, and of course, Omatech, all gaining 10% respectively from the top three there. Of course, looking at the losers for the day, we have the likes of Restaurants, of course, CI Leasing, and of course, Morrison. Restaurants, of course, gaining 3 naira 15 kobo there to close negative at 10%, as well as CI Leasing 3 naira 50 kobo to close us downward 9.79%, and of course Morrison also closing downward there 1 naira 97 kobo it lost there to close negative at 9.22%. The top traded equities for the day, we have the like of course all of them from the banking sector, Access, GT, and of course UBA, all of them dominating the activity chart. 112 million shares, 79, and of course 7.23 million volume of shares respectively. The sectorial performance are largely positive. Of course, the sectorial performance are largely positive. The banking sector positive, the consumer good positive. The banking sector, please. The sector, can we have the sector on the screen? Oh, thank you. The banking sector there, 3.50%, the industrial sector, 0.17%, and of course, the consumer good also largely everything positive from the top 5 that we're actually looking at today. Looking at the rest of Africa, we are having the rest of Africa markets, please. We look at, of course, GSE in South Africa closing positive 0.02%, and of course the NSE in Nairobi Stock Exchange also closing downward there 0.05%. GSE in Ghana, our next door neighbor, one of the market that's competing with Nigeria in West Africa sub-region, also down 0.1%. We'll look at the market this morning. Of course, I have my guest right in the studio, Steve Nwachukwu, who is a financial analyst and of course also a stockbroker. Good morning, Mr. Steve.
Good morning. Thanks for having me.
Yes, good to have you on Business Daily today. Now, let's look at the markets now. We see the index crossing 60,000 basis points. The last time we had this number was before the 2008 global meltdown that crashed the market to almost 20,000 basis points, as the case may be. What do you think is responsible for these rallies that we are seeing in the market right now?
Well, thank you once again. I think there are a couple of issues that have, positively affected the market, in the sense that we have also, beyond the bullish run in the market, we also had some new entries in the market in a couple of 2, 3, 4, 5 years ago. The likes of MTN was listed, the likes of Dangote Cement, the likes of Airtel, the BUA Group, and the rest. So those are highly capitalized stocks. That's why you are seeing market rising close to about 32.7 trillion naira as we speak, and index crossing a psychological height of 60,108.86 basis points. So it's quite positive in the market, in the sense that you have the oil and gas driving the market, last week they've gained close to about 60%, followed by insurance, and followed also by consumer goods, and the banking sector having about 46 or 47% increase, year-to-date increase in the market. So overall, the market have seen about 17% increase, year-to-date increase. So like I said earlier, it's a couple of issues: heavyweight capitalized stock moving into the market, and also some economic decisions. Recent 2-3 days rally, or recent 2 weeks rally, saw the likes of the banking sector, the oil and gas also going up, because most of them, these policies of the new government actually affected them positively. In the oil and gas sector, you saw a couple of them because of the new price range or new price regime in the market. So they actually, a couple of them, like I said earlier, had inventories in the market, in their depots, in their storage. That was why you saw some of them going up, because the price reflections from 196 naira per liter to somewhere around 540, 530, or 520, depending your location. So a good number of these very major oil marketers had a lot of reserves in their depots, and that is how their books or their top and bottom line have actually reflected a huge profit.
Indeed, interesting submission there, Mr. Steve. Looking at the investors that we have on the market now, before now, the market was actually dominated by local investors following the uncertainty in the economy. Local investors, contributing about 76% of total trading volume. But right now, there is a renewed interest in the equities, and foreign investors are indeed coming in. Do you think their impact, or in any way, is affecting the market? Is affecting the market, or do you even think that we need them to come in at this time where it seems like we are getting it right in terms of our economic policies?
Oh, are we getting it right? That's a topic for another day. But for sure, we really need foreign portfolio investors, or foreign direct investment. In whatever form it comes, the country, Nigeria, still needs such kind of inflows to boost the economy and also to boost the market. Yes, of course, the indigenous or local investors are actually dominating in the market, and they'll continue to dominate. We'll continue to see some unhealthy policies of government which have, resulted in confidence lost in most of these foreign portfolio investors, and they have pulled out because of the issue around the multiple exchange rate regime that have been practiced. And now we have a new regime where you have the exchange being floated. It's an encouragement for them, because there is a determined exit point for them. At any point they move in their money to the market, so they know that the market will be determined. The rate, whatever they will get, will be determined by the force of demand and supply. So we welcome them if they are coming in, but I know that the recent rally is not as a result of influx of foreign investors. Actually, it was just the local dynamics, a couple of policies of government, the removal of subsidy, and unfortunate removal of the CBN governor saw the banking and the oil and gas, two sectors that drive the bullish run we saw in the market in a couple of days or weeks ago.
Now, interesting there, Mr. Steve. Will you say that the banking sector is the beneficiary of the exchange rate unification? Because it seems that there is so much attention in that part of segment of the market.
Unfortunately or fortunately, yes, definitely, because this is the financial sector. Issue around the exchange rate, issue around money, still run circles around the banking. So they have a way of bringing forex. They also have a way of facilitating importers and local manufacturers, or even those who are bringing one finished goods from one country or the other back. So they have a link to forex. So they have a link to receive forex. They also have the link to access and give those who needed it. So definitely it will impact in their balance sheet, in the sense that their turnover will increase, or the bottom line, which is the profit after tax, will increase because of this very new regime whereby is a willing buyer and willing seller, in the sense that the banks can go all out and look for dollar anywhere and sell to those who need it. It's no longer dependent on CBN. Yes, I know for sure CBN is not totally leaving its responsibility of defending Naira or providing forex for Nigerian economy and meeting up our balance of payment. Yes, I know the banks will want to play now. A couple of them had what we call their Euro bond. They've raised, like Fidelity recently. I think Fidelity is the last raised fund, about 500 billion Euro bonds. So these are the kind of ventures that you start seeing commercial banks moving in to look for funds elsewhere, to look for those dollars so that they can be able to service the local market. So I know for sure they would definitely benefit from the recent happenings.
Mr. Steve, before we wrap this segment up now, as an investor, what do you think one should do about the unification of exchange rates? If you're an investor coming into the Nigerian market, how do you think the exchange rate unification will affect your choice of investment?
Well, for sure, one thing about foreign investors is a question of confidence building. If confidence are eroded, if there is no stability in policy of government posture, that's why sometimes what drives them at is inconsistency of government policy decision. When you are consistent and you have a roadmap and they are sure of the entry and exit, as it stands now, they are very certain where the risk. So it's a question of the risk of what would be whenever they want to exit. Now you have an open market whereby you can say it's a floated but marginally managed by central bank, because there is no totally a floated exchange market in the world. It will definitely be managed by a CBN, the CBN of country. So a question of foreign investors coming in and how they perceive the new flotation of exchange rate is a good one for them, because it gives them that clarity of purpose. It gives them that clarity of where the government is heading to and what the government is looking at. So the regime of multiple exchange rate, whereby you have one for NNPC, importation of petroleum product, you have one for importers, you have one for school fees, PTAs, and the rest. So now is a unified one, and it's a one single market where you can go and get whatever forex or whatever exchange rate you demand from. So it's a willing buyer and willing seller situation whereby the market determines the exchange rate. So it's a good one for them, but definitely they want some level of sanity in the market, the level of sanity in the economy, so that they can help them take right economic decisions, in the sense that, yes, you have a floating market, you have an exchange rate can guarantee their exit. How about the healthiness of your economy? How about other macroeconomic indices, whereby if I come into your market, what is the possibility of inflation eating up the money I brought in? What is the possibility of recovering or doing good business in the side of security, in the side of a good business environment for businesses to thrive? So these are all the factors in foreign investors look at. But as it stands now, we have gotten it right in the issue of the flotation or the managed exchange rate. It gives confidence and clarity for foreign investors.
Absolutely, absolutely. Steve Nwachukwu, financial analyst, stockbroker, I must thank you for your time on Business Daily today. Interesting submission there.
Thanks for having me.